Hello. I think seeing the crowd increasing, I believe this is the most interesting panel at IBW. So I'm glad to have Piyush and Jack, both great friends in the same space that we are building. So at ZOTH, we primarily focus on cross-border trade. I would love to kind of understand from Piyush, what got you into RW? You have been in like trade finance, you have been an investment banker for so many years. Why blockchain?
I think inefficiencies primarily, scams, frauds. Not saying that it doesn't happen in Web3, it happens at a different scale. But money laundering, particularly in trade finance, was the biggest culprit of scams. Most of the large corporates used to borrow money from multiple sources. They used to get refinancing of the same invoices from 10 lenders. It was just amazing to see the level of frauds and scams which used to happen in the industry. Blockchain was new to me, but I realized one thing, that probably blockchain creates immutable ledgers, which can probably solve a problem. And a very initial thought which came to the mind, that there is no communication layer between the lenders. Like, you as a lender will not talk to other 10 banks and figure out that whether this invoice is already funded or not, or whether this corporate is bad or good. That communication layer can be built on blockchain. So I think that was very initial push for me to start moving into this space. And then, yeah, rest is the history. Now we are 3 years into the blockchain space.
Amazing journey, Piyush. And Jack, you have been a fintech veteran. Jack knows Hindi also, by the way. So maybe few words would help for the
कोशिश कर
audience.
सकता हूँ.
So from Tala to now Jia, what's the difference? What made you do the shift?
Yeah, I guess for a little background context, what got me interested in this world of real-world assets is really just the real world and trying to solve a problem in the real world, which I think is what most of us interested in this space are here to do. I mean, I began my journey working in FinTech lending really because, when I first moved to India, I was hanging around these chai stands, hanging out with chaiwalas, seeing people running a real business, unable to access any financing. Obviously, banks wouldn't give them loans. They had no credit scores. And so sort of began my career working in microfinance to provide them with some access to credit because the financial system as it was built was not serving them. And I think what we're doing at GIA is really just the logical next step, right? From traditional microfinance to FinTech lending off-chain, now to FinTech lending, but just using the blockchain is what we're trying to do. I think one way to think about what we're doing is, as I mentioned, think of a chaiwala with no credit score. We're really trying to use the blockchain to be that global credit bureau, right? If we originate loans from an on-chain liquidity pool, and that chaiwala takes the loan and repays, now they have some financial visibility in the real world.
Amazing. I think you are touching the very end of the financial spectrum across, especially I think the markets you operate like Philippines and Kenya, correct? Now, one question, I think, I also run an Indian syndicate, and lately over the last 2 months, thanks to some tokens like trade tokens, a lot of projects have started coming, pitching RWA, that we want to be an RWA project. I have been in this space for a year, and, it's hard. So would love to understand from Piyush, what would be some insights you would give to new entrepreneurs building in this space?
I think what Jack has mentioned, what you are doing, Pritam, and what we are doing at Polytrade, try to solve the problem. Don't unnecessarily create a product just for the sake of it, right? India is at the cusp of, we have seen digital transformation like anything in India. Those chaiwalas which you're talking about are actually using Paytms, receiving their currencies instantly without scrambling for money, right? So you see there is a grassroots level problem which can be solved by blockchain, right? So you have a thought behind it. What you're doing is distribution of wealth, capital to the right sources and getting yields out of a completely new market or new product class. What we are doing is providing capital to SMEs, what we were doing for last 3 years, and now we are getting into the marketplace narrative where we are literally calling ourselves as an open sea for RWAs. It solves discovery. Again, it's not about us. Point is there a problem statement big enough for you to put everything at stake and literally jump into it, right? You're sacrificing your careers, you're leaving your jobs, And then you think of a fancy life of a founder, and you think that, I'll be able to raise $1 million in bull market. But, and we've seen scams. People have raised shitload of money, I'm sorry for my language, but they run away. They have no product built, right? So have a problem statement so clear that you could actually die for it. You could do anything for that, right? And then build the product, deliver, keep doing it again and again and again till you reach that stage where you can say that finally, I've done something. And don't run for making $1 billion company. I'm not that kind of founder, to be honest, right? I'm not here to make $1 billion company. I'm actually very happy the day we fund first invoice and we said that, yes, we did that, right? I think that is more happy, that brings more happiness than anything else to me.
No, great, great, Piyush. And I think that, again, on the same context, when I started ZOTH, for example, or typically most of the RWA projects, even a year ago, you go to VCs, you go to typical crypto degens, the typical answer is, hey, I get 1,000% yield. What will 12% a year do for me? How have you, been able to convince investors to fund your company? And most importantly, how are you managing some of the challenges, especially around liquidity at GIA?
Well, I think the real world asset trend and narrative sort of represents the maturity of the crypto space, because 1,000% yields are just not possible over a sustainable long-term period, as we've seen from the history of finance, because blockchain is a new technology, but it doesn't change the basic laws of economics. You need some value creation to get some return. And what we're doing by bringing these real-world assets on chain is we're beginning to, I think, sanitize or make more sane the sorts of yields here. And so certainly when we were raising money and when we raise LP capital, we can't really go to traditional degens. If you're looking for a 1,000% yield, it doesn't make sense for you to give a loan to a chaiwala, because this guy's not going to make you 1,000% yield. But he is going to make you something healthy. He can provide 15% APR year over year over year. And I think that's really exciting for a lot of investors. I mean, just look at all of the money that's now on crypto in stable coins, and the risk-free rate is 5-6%. If they don't do something with that money, they're effectively losing money. And so a project like GIA, which is providing private credit yield returns to investors, lets them at least not lose money and lose out on an opportunity.
Just one funny line I got from one of the panels we were sitting. Somebody said that if you don't know the source of yield, you are the source. Yeah. You are the source.
Perfect, Piyush. So I think adding on to that, again, we see typically everything in the world can be tokenized and bought on chain. And, there has been many narratives starting from real estate to carbon credits to NFTs and arts and all of that. Specifically, for example, I believe the reason, say, products like T-bills have gone up so quickly because there is a strong liquidity ecosystem built around it. So, again, maybe for entrepreneurs in the crowd, what are the assets typically, say, you guys think would be the best ones and easy ones to liquidate? In my view, for example, I believe that real estate is the toughest one. If somebody cracks it, that's going to be big, but the amount of complication that's involved, it's going to take a long time to educate the market. But happy to hear your thoughts, Piyush.
I think we have seen financial worlds exist for centuries. Blockchain world is no different. The fast-moving products, what we call them, even in financial sector, could be yield-based products, which is always the case. Always fixed income is a very critical part of the portfolio of every individual or every institution. I think fixed income should, and we've seen that, by the way. Last couple of years, the RWA narrative, which has become so strong now, we have seen billions of dollars flew into treasury bills. Not just because the interest rates have gone up, but also because corporate treasuries always park their money into something which is safe haven, right? So I think any yield-based products would still dominate the market. And then comes the degen crowd, which wants to trade things, which wants to make basis points on everything. Again, fixed income, interest rate swaps, or if regulations allow us, stock markets, bonds, all that can start coming into the play. So.
No, great. I think And Jack, any thoughts about you? What assets you believe like would get traction and which one won't?
Yeah, I think it's natural that we see a progression of real world assets basically from sort of least complicated to and least risky to more, right? Right now, most real world assets and a lot of the activity in the space has been around T-bills and treasuries. It's a liquid asset. It's one that people understand. There's more transparency in it. And then from there, we're going to just grow in sophistication. So what we do at GIA is private credit. Now, private credit, I mean, let's say there's a $5 trillion, maybe it's 4 trillion, maybe it's 8 trillion, whatever. There's a huge credit gap in the world. There's a lot of small businesses and individuals who aren't getting access to credit. And part of the reason they don't is because there hasn't historically been transparency into that asset class. And so because there's not transparency and traceability, large investors are not investing. That's why so many people get left out of the financial system. So what we're trying to do is just, if we believe that the future of finance is moving on chain, that more and more assets and more transactions are going to be represented there, I think private credit is a natural area where there's a huge problem statement and an opportunity for investors to earn returns for just disruption or the progression of finance. It's basically making capitalism more effective at serving people.
Thanks, Jack. And adding to that, I think one of my core beliefs why we move to RWA typically is that, even if you look at the entire crypto ecosystem, it's less than $1 trillion. It's less than the market cap of Apple. And, the amount of hype we create is 10x of that in terms of value. So always there is a narrative that, this is going to go big when BlackRock comes in, the banks come in. But the question sometimes, especially when we were working, are they going to really come? There are early signs of it, but, like we are working with some partners like Fidelity and Piyush, you are part of MasterCard. They're not necessarily a bank, but obviously a large financial institution. What made MasterCard so interested to work with you? How did you get in it?
I think I'll first make it a very general statement that every large institution in the world is accepting this fact that blockchain is the future. And they have already started creating enough resources towards it. MasterCard is no different. Visa is no different. So MasterCard has this accelerator program which promotes new technologies, new areas where MasterCard can get more strategic in future, right? They are not a money exchange. They can't print money, so they will never launch their own stable coin. They are not banks. They can't take deposits. They are an infrastructure player, right? So with their accelerator program called StartPath, they are identifying companies which are creating infra for the next wave of financial, changes. So tokenized deposits is a very common flag term. I'm not sure if you guys have heard it, but UK Central Bank has already announced that every bank should come out with their own tokenized deposit, which means that if you have $1 million in a bank, you can go to your bank and request them to issue a tokenized version of your deposit, which literally brings your $1 million on chain and a regulated money, right? Now, if there are 10 banks who are issuing tokenized deposits, MasterCard is coming as a trusted player and saying that if A party pays to B party from their bank, now bank A tokens are gone to bank B tokens, right? How would bank B accept it? There where the MasterCard comes, which is a traditional trust agent, saying that if you're a vendor in Africa, doesn't matter, you can accept a Indian credit card, which is powered by MasterCard or Visa. Don't worry, we will settle your payment. That's what MasterCard says. Exactly, they want to do that into the crypto space. So crypto is still not a right word. It's not a cryptocurrency. It's in a form, a digital currency, but it's a tokenized deposit of your own bank savings. So we are going on with the pilot with them now, UK and Southeast Asia, where we will be working with larger banks to create trade finance products where party A pays to party B in different tokenized forms, and MasterCard will settle all the parties. So again, we are just one of those companies, but they have selected 6, 7 other companies who are doing different infra plays. And yeah, so that's the MasterCard play, right? I mean,
amazing. And Jack, I think adding on to that, private credit typically has been the forte of wealth management funds, wealth managers and investment bankers. Now, for example, at our end, what we have realized that they already have a very strong distribution channel, and we have started leveraging them. So in case, like at GIA, what's the distribution model that you are taking? Are you working with some of these large players, or you are taking the more on-chain capital route?
For distributing our returns, you mean for sourcing investor capital?
Or sourcing investor capital?
Yeah. Well, in some ways, the reality of real-world assets, because it's so early, is a lot of the investors they have a stake, right? There's equity investors who are putting in some LP capital. I mean, the biggest real-world asset deal by far to date, I think, is Block Tower, MakerDAO, Centrifuge. So Block Tower has put in, what, $30 million of junior capital there, but they're also equity investors in Centrifuge. They have some stake in the game. I mean, we should be real about the phase we're in. And so some of our LP capital comes from our equity investors. But also some of it comes from high net worth individuals, or not even that high, like medium net worth individuals who want to access this asset class. A really good example might just be my dad in Philadelphia, right? So he's always been interested in the work that I do. You know, I lived in India for 4 years working in microfinance, and he'd say, yeah, how do I give a loan to a chaiwala or some guy, running a kirana store in India? And there really is no good answer for him. I'd say, well, you're retired, maybe your pension fund has invested in a hedge fund, which has invested in a debt facility for a FinTech lender, and eventually it gets down to a kirana store. But that's a lot of steps between my dad and that kirana store guy. And each one of those steps, of course, takes some money out of the value chain. The idea that he or anyone can just connect their wallet to a liquidity pool and deposit some US dollar stablecoins, which we can then connect directly to that end borrower, that's just a much more efficient system, and it's really exciting. So, we're still so early that we have, probably 20 use cases of that, but I think that's really exciting. That's the beginning of more financial inclusion, not just for the chaiwala or the kirana wala, but for the investor on the other side of the world.
Amazing. And I think the amount of friction and the middleman that goes away with blockchain is phenomenal. Now, coming to the most important part that kind of impacts our sector, regulations. So, for example, at ZOTH, we have been taking a very regulation-friendly approach, working across jurisdiction like Luxembourg, and through compliant structure, typically distributing. So would love to know, so one of the core beliefs that we have is that retail is still very early to RWA as an investor, as an LP capital, and maybe the focus should be more towards institutions and HNIs. Would love to have your thoughts about both regulations and, what's your TG? Is it retail audience or it's more towards institutional?
I'll go first. So I think, because we are creating a marketplace which will be attracting both retail and institutional liquidity, we understand regulations are necessary because, again, we do not want any bad money to flow into these assets. Our first launch of marketplace is largely with collectibles. But the moment we start dealing in financial products, which could be assets which you are trading, which could be assets which you are trading, we will be applying for VARA license in Dubai. Simply for one reason, that we want to invite every form of capital which can come in, right? And we are still not living in a gaga lala land where there are no regulations, which Web3 ethos always go to, but I'm not a big fan of that, because if you make this world a control-free world, we all will start killing each other. We've seen that, right? Countries where all the runs happen and the governments are turned upside down, that's where the laws are broken and people are just ready to kill each other. We are a civilized society. We need some sort of regulations. We can come to a middle ground, but we can't say that we do not want to have regulations. So that's my take.
Yeah, I totally agree. I think sometimes at crypto conferences I feel like a weirdo for being okay with regulations and laws. I think regulations usually are put in place to protect people, for the most part, from capitalism gone wrong. And sometimes they don't even do that, right? Like, we still have massive scams and frauds. But for the most part, I think what we are doing is very much kind of straddling both the worlds of on-chain smart contracts and off-chain very boring legal contracts. So everyone who invests in our pools they still have to sign like LLC subscription agreements, and everyone who takes a loan from us still signs a lender agreement. So we're still, I don't think we're in this world where like it's perfectly, everything's connected by blockchain, unfortunately. And the world will be more efficient once we get there. But I mean, I'm curious you've been asking great questions, so I'll ask you a question, right? So your background is in supply chain finance, right? And invoice factoring, that sort of thing. So my biggest challenge right now, we lend money to a chicken farmer in Kenya, right? And he's selling his chickens to a restaurant. He has an invoice out to that restaurant. He has cash flows that are coming in. And traditionally, we find ways to factor that invoice, but okay, we can take a picture of it and tokenize it and put it on chain. Who cares? Who says that like the holder of that tokenized invoice is going to get access to that capital? And so I guess I'm curious, like, where do you see this going, and like what infrastructure needs to get built for us to actually use blockchain to expand that sort of financial access?
Yeah, so I think, for example, fraud is a big challenge in not only just trade finance, typically in finance. So one of the things, for example, we are part of both Chainlink Build program, which allows us to create proof of reserve across various channels. So in our case, we are working with a mass regulated, one of the largest banks of Singapore. Most of the factoring in Singapore are done by them. Now, it starts from the point of invoice generation. So there is a software which tracks the generation of the invoice, and then the entire data value chain comes on chain, and then you factor the invoice. Till that happens, currently it's at a stage where like 10 to 12% of the entire invoice generation in a country of Singapore is captured through that. The idea is to take it as much as possible, higher as much as possible. But the intent is till then you have to kind of, I, for example, am not comfortable working with a chicken farmer right now. Yep. Because I don't even know if the chickens will ever hatch eggs or not. But I do know that I am comfortable working with a Zach or a Piyush who have some reputational risk and credibility risk if things go wrong, like I do, or with a large institution like a bank or a licensed FinTech who has a lot at stake. So for us, that having that intermediary is very important till we have a full end-to-end flow of chain. And we are actually working with some chains also in this space who have strong partnerships with bodies like ICC and as well as some of the top L1 chains who have a very strong narrative around RWA. But yeah, till that happens, you would need intermediaries, either traditional companies or progressive new age companies like you guys to play that role.
Yeah, so in short, we need more than just like Web3 builders. We need regulators to put structures in place. And yeah.
So I think we are at the pretty much at the fag end, but I would love to kind of, when I was coming in, 2-3 entrepreneurs also met me and asking about RWA space. And I believe like when I started, for example, and we started raising, no crypto VC really is like very crypto degen VC was very interested in the RWA space. The thing has completely shifted. And obviously last 1 year, I believe is the worst period of the crypto space that has ever seen. Piyush has been longer in the crypto space than both of us, but I believe that, I haven't seen such a bad phase ever. What are the top 3 things that you would like to kind of share of anybody building in the RWA space? What are the things they should watch out for, and what would be like your top 3 guidelines? Maybe Piyush, you can go first, and then Zach.
Zach, you go first.
Yeah, maybe Zach, you can go first.
Sure. Top 3 things. Well, first, I just want to echo your experience. When I started raising money for GIA, I think the first few VCs I spoke to basically said, this is it's too real world for us. Like this actually is like a normal kind of approachable business, which I thought, I was like, okay, why is that a bad thing? But I think now the narrative is switching a little bit, and I think there's going to be increasingly less distinction also between what is crypto and real world and fintech. It's just going to be like assets that are on chain and the general finance industry. What are the things that feel really important to me going forward? I guess one thing is also is for builders to not like follow narratives too much. Like even though real world assets is like a hot narrative right now, I think it would be bad if we followed the trends of crypto past and just started building to make a quick buck, because that's not what's going to happen here. I think people need to build real businesses that create real value and have patience, and not go chasing some crazy fast return. That's probably my, I guess.
Or like every company is now AI company.
Right. Yeah, right. Everyone's pivoting from whatever they were doing to do with AI. I mean, if it works for your business, that's good. But don't just do it because it's the narrative.
And Piyush, about you.
Yeah, I think just one line here that as I mentioned earlier also, find a problem statement which can scale, which can actually solve a real problem. VCs are not stupid. They understand that there is they're here to make money. They see thousands of projects every day and they have to select 5 out of them. I was just talking to a VC and he said that you think our life is easy? Selecting 5 projects out of 1,000 and putting money into that and then making sure that they succeed, right? So I think find a good problem statement which can scale. VCs are smart enough to identify what is a good project. And yeah, liquidity was tight for last 1 year. We have all seen that. Markets are turning. We hope that this will be again a great bull market for all of us. So just keep building and keep your heads down. Do not overspend. Keep your expenses in check so that you can have a longer runway.
No, amazing. And thanks, both of them, we have been working together. And it's great to have both of you here. I will open the floor to if there are any questions from the audience. Maybe 1 or 2, please.
Hello. Actually, I'm a professor in the area of finance. So you're talking about financing MSMEs. You are talking about microfinance. So, and ultimately, the objective, what I understand from your discussion, because I'm not from the technical background, so it is all about elimination of the intermediaries, and you are connected directly to the interested parties. So my question is related to the financial market world. So do you think that going forward, blockchain will eliminate the intermediaries in the financial market, the brokers? That is one thing. And what is the trend you are visualizing for the next 5 years in the financial market?
Yeah, so maybe I can take and you can. So I'll give you an example at our end. We distribute fixed income products. We work with partners like, multiple partners in this space. Now, same product that we are distributing is typically a debt product, has at least 2% or 200% low basis point when you are doing it to a traditional structure. The moment we put it on chain, the same debt structure is generating higher yield. So typically in debt business, these small margins, this half a basis point, 1 basis point is a big number. And when you spread it across millions or billions of dollars, it adds a lot of money. So blockchain makes things efficient. It reduces a lot of intermediaries. Will it completely reduce the usage of brokers? I don't think the margins might reduce, but there still would be some intermediaries in the process. But the whole cost structure of doing the same thing would definitely reduce. We, for example, see almost 80% reduction in the total flow of funds if we would have done that on fiat vis-a-vis blockchain. So I think that's the advantage that we see at our end. And for example, most of our LPs are actually traditional banks or financial institutions, and they don't really care. All they care is the yield. So how do you generate the yield is through making an efficient financial solution. I hope you're able to answer that.
Okay.
That's it? Yeah, okay.
Okay.
Okay, there is one more question.
Sorry, in the interest of time, if I can request to take it offline, please. The panelists are going to be here. Thank you. Thank you so much, Piyush. Thank you, Pritam.
Thank you.
Thank you, Zach.
Thanks, Kapil.